Gold eased up again today, but it doesn't change the bullish feeling of our next guest. Jay Taylor is president of Taylor Hard Money Advisors and editor of miningstocks.com. Good to have you in studio.
Likewise, good to be here.
Okay, now we had the Eurozone get a bit of relief there, courtesy of 4 central banks. So gold fell about 50 bucks or so at one point. So gold is no longer in favor. That's it, no more, huh?
You know, I'd like to see gold get taken down a little bit more so I could buy some. I think gold's overdue for a correction. You don't like to see anything, if you're bullish on something, you don't like to see everything, that item go up forever. You need to see some back in fill and consolidation, and I think that's what I want to see. I'd like to see gold get down to the low 1700s, and then I think I'd start to look to buy some more GLD with my liquid assets.
Now, will there be a catalyst for that? Or you say you want to see that, but what do you see actually happening? Does that bring us down to, I guess the 50-day moving average at 1716 might be a good support.
Right, that's exactly what I'm looking at, the 50-day moving average, and I think that what would be the catalyst would be some more happy talk from central bankers that suggests that they can make things well again, and there's enough gullible people that believe it. Then let's sell our gold and let's buy the party items again that are on the paper stocks.
We so frequently talk about how gold has climbed so far so fast, but the equities haven't followed suit, and a lot of that has to do with the fear that maybe the value of bullion isn't a true indication of what it's worth, and that it will come back down as opposed to the equities move up. You disagree?
Yeah, I think gold, what we're seeing is it's not that gold is going up in value, it's that paper is going down in value. Although it is also true that gold is going up relative to most other tangible items, especially since the contraction, especially since the Lehman Brothers credit contraction of 2008. You've seen gold rise dramatically relative to a basket of commodities.
So then when do we see the underlying equities follow suit? You like sand gold. When does sand gold make a breakout?
Well, I think they're about to now. You know, and honestly, I think it's probably a lot of money going into the ETFs. As you know, I've heard Dennis Gartman say, don't buy the stocks, buy the ETFs. You want gold exposure, buy the ETFs. Well, and I think that's why the gold shares haven't performed as well as they would have in past bull markets. But you're starting to see earnings of the major mining companies grow very dramatically. And because the real price of gold is going up relative to other cost inputs, relative to copper and materials, relative to energy, you're seeing the real price of gold rise very dramatically. And with that, we're seeing profits of major gold mining companies surging very dramatically.
Now, for example, the street is very bullish on sand gold as well, but 87% of those polled by Bloomberg have a buy recommendation, and the consensus is it'll revisit its beginning of the year $4 highs. Do you expect that over the next 12 months?
I wouldn't be at all surprised to see that or much higher, and the reason I say that is having talked to George Perry, the company's CEO, he's talking about an exponential growth in the resource of this company. They have what he calls the most aggressive drill program he's ever seen on a single property. They're drilling 300,000 meters, spending $25 million this year to drill that. And they have workings going down a mile under, and they have all these parallel zones, very high-grade parallel zones. They're going to be drilling horizontally into those zones. So for the amount of money they're spending, 300,000 meters is a huge amount of drilling. And these are very, very high-grade zones. So he's talking about an exponential growth in the resource. And I would guess that if that comes to pass, and I have no reason to believe it won't, given what I know about the project, then I think the street's going to price this thing probably higher than $4.
So if the stock lives by the drill bit and dies by the drill bit, when do we get those results? When does the next press release come out that helps push the share higher?
You know, I'm looking more towards the end of the year because this is a very aggressive drill program. I'm not honestly quite sure when they're going to be releasing this information, but it's really, I had in my mind by the end of the year that we'll see. And by the way, when they come out with these much higher numbers, they're going to revisit the scope of this project. They're now able to produce at something like 1,700 tons a day, but they'll go to a much higher level, probably depending on the size of the resource. I would expect them to double or triple that possibly in the future, longer term.
Jay, thanks so much for coming in.
My pleasure.
Jay Taylor, president of Taylor Hard Money Advisors and editor of miningstocks.com.